David, I'll start with you. Just give me your reaction to the number, whether it's changed in any way, sort of your general views of markets and the Fed's path.
I feel pretty good about the number. I mean, what I think it shows is, yeah, the economy's got plenty of jobs momentum, but there's some flexibility in the labor market here. I like seeing this labor force growth of 330,000 extra people in the labor force. I also think that it's good that wage growth is backing off a bit, and I like to see this growth in employment in the sectors that most need the workers. We're seeing more truck drivers. We're seeing more people in leisure and entertainment. So, the economy is gradually slowing down. This is the third month in a row with 3.6% unemployment. We are coming in for a soft landing. And I think, one of the biggest risks here is the Federal Reserve doesn't realize this. This economy is going to slow. Inflation is going to roll over. I know it's taking too long for everybody's perspective, at least the Fed's perspective, but they've got to be patient here because we are actually on the right path here.
Diane, do you think it points to a soft landing?
I think we're going to have a little more hard landing. What I do think is, although, yes, we did see the slowdown in overall wage growth, what was really interesting was the breakdown in the details. What we saw was non-supervisory workers' wages actually accelerated during the month. They're up 6.5% from a year ago, close to the 6.6% we saw last month. And so that cooling is not really happening as much as we would like to see it in the broader economy, certainly for the Fed. Also, we saw the number of people who were out sick and could not work moved up again. We're running about 40% above the levels we saw pre-pandemic in terms of those people who are out sick every month. That's adding to staffing shortages. The Omicron wave sort of going through its second wave right now. The peak was over 3.6 million in January during the height of the Omicron wave, but that's adding to staffing shortages. So even though we saw a bit of a cooling in wages, when you sort of strip back the figures and look at the underlying wage figures, there actually is growth picking up again in non-supervisory workers, and that is something that is good news, except it's not enough for those workers to actually keep up with inflation. Also, we saw the supply of multiple job holders. They actually fell back to their lowest levels since November 2021. And I'd like to believe that's because one job is enough now all of a sudden. My suspicion, though, and we're starting to see it in the beige book, is that higher prices at the gas pump have increased commute costs and making it harder for workers to take on that extra job to make ends meet because they can't afford the commute costs of that extra job. We've seen it in things like Uber and Lyft, actually a pullback in those workers and the supply of those workers, which have surged the rates in many urban areas.
That's a really interesting point about the impact of inflation on getting that second job. David, I'm curious, can inflation actually come down when you have an unemployment rate of 3.6%? Is that even a possibility in this environment?
Yes, I think it is. I mean, it'll be an interesting thing to watch over the next few years, but we are going to see eventually a rollover in some of these supply chain issues. I think that's going to cause the year-over-year inflation. We're not going to see the prices come down, but we'll see the inflation rate come down in some of these areas. I think it's also really interesting watching that drop in retail employment, because what that tells me is, particularly in things like grocery stores, we are seeing a backing off of spending on basic goods in this economy, and that should also relieve some inflation pressures. So I think inflation will gradually come down. In fact, eventually we're going to overbuild in a lot of these supply chain areas, in a lot of inventories. Eventually, by the middle of this decade, I think that's actually going to put downward pressure on inflation. So I do think it's coming down slowly right now, but I think it's going to come down slowly for a long time. And we just have to be patient and let it come down rather than trying to win the war on inflation all in 1 year and tip us into recession.